Well, hello. This is going to be sort of an instructional video, not accounting 101. It's pre-accounting 101. Everybody who is watching this should know at least the very, very basics of doing a financial statement. Now, what is a financial statement? It is like a still picture of how much you are worth, what your assets are, and what you owe, what your liabilities are. And it's a very good idea to do it about twice a year. In fact, most financial statements are dated January 1st and July 1st. And in this video, I'm going to show you how to do a simple financial statement. And the nice thing about it is a few years from now, you go back and you see if you're getting ahead or if you're going behind. If you're getting ahead, that's good. That's what it should be. But if you're losing money and your assets are declining, it's time to change your behavior. So here is how we're going to do it. The first thing you're going to do is get the easy stuff, and then the complicated stuff you put in later. But I'm just going to make this up. This is like fictional. Now, generally speaking, you want to do things in the order of liquidity. Now, liquidity is an accounting concept. It just means what can you cash out of real fast, and what can you what takes a long time. All right. So cash is very easy. You look in your wallet. What do you have? You got $200 or euros, 200 euros. How about in the drawer? Do you have any cash in the drawer? Well, so that's the first thing you're going to put in. And now we're going to do it. All right. Now, liquidity means convertible to cash that you can spend right away. So you looked in your pocket, you looked in your drawer, and you got $500. So you put in $500. Now you could have it in euros, in dollars, in pounds, in pesos, whatever it is. You're going to choose the currency that you use for everyday expenses, and you're going to put that on the financial statement. So you have to choose your currency. Now, with a question of cash, you don't have to worry about cost. Cash is cash. What you paid for it or what it is worth now, it's exactly the same. Now, the next category will be crypto. Let's say you bought some Bitcoin a couple of years ago, or Dogecoin, or ETH or Ether. You bought it and you looked at it today on your internet. And how much is it worth? If it's worth well, anyway, you figure out what exactly it's worth today. So we'll say $2,000. And then you think back or you look back and you see what it cost you. Well, aren't you lucky? It cost only $50 3 years ago. And so you put in the present market value, the cost, and your profit or loss. It could be a loss, but you have 1950 in profit on your crypto. Now, of course, you make a separate list of Bitcoin, Ether, Dogecoin, whatever it is, on your sheet. And don't worry about using up paper. If it takes 20 sheets, that's your financial statement. But in the end, you'll kind of do a summary, which will look like more like this: all your cryptos together, and your cost all together, and your profit all together. Now, the next thing, usually in liquidity, is bank accounts. Okay. Well, in other countries than the USA, your bank account may have securities in it, bonds, stocks. But for now, all we're going to do is we're going to put in the value of all your bank accounts. It doesn't matter what you have in them, but you might have a separate sheet on bank accounts with exactly what's in it, because you want to know what you had 5 years ago, what you have now. So if you have a stock in Amazon, you want to know what it cost, and you want to know the market value, and you want to know if you're ahead or behind. All right, after bank accounts, which is very easy to figure out, we're talking about the US cash, but in other countries, you might have stocks or bonds or even gold coins in your bank account. So I've just taken this out of the air. It's pure fiction. We'll say that your total value is now 3,000. But how much did you start out with? Well, you started out with 3,100 over the last 2 years. And so you're down 100 on your bank accounts. The next category is a surprise to most people. It's personal stuff. Now, what is personal stuff? Cars, furniture, stuff that depreciates hugely. I once bought a sofa for $2,500. When I moved and had to sell it, I couldn't even get, well, I got $100. So there's a huge loss on cars and furniture that you don't realize you're losing. That's kind of the lesson there is uh, don't put a lot of money into cars, furniture, and personal stuff that you have in your apartment because you'll never get it out. In fact, I have a Chinese chest that cost $5,000, hand painted, and it's really nice, holds a lot of stuff. I'll sell it to you for 250. You can get a picture of it by just asking me. But anyway, I don't want to deviate too much. Personal stuff. Now, the next is something that for most people goes up, at least with inflation, sometimes 20 or 30% a year, and that is gold. You can have your gold in bars, in new coins, or old coins. Uh, and you can find out what gold is worth every single day by simply looking on the internet. Uh, let's see, it's called, what's it, XK? Well, anyway, there's several sites where you can get the value of gold right away. I'll tell you that in a minute, but we're going to put in a fictional value and then I'll get back to you. Okay, so we were lastly talking about gold, but I know a lot of people collect silver coins, old dimes. They call them cartwheels, is the old silver dollars. So you might have a few of those. And so I made up a figure of your current value. You looked it up and it's 600. Who knows? You might even have a platinum bar, but most poor folks like me don't have platinum. But platinum used to be worth more than gold. Now it's worth a lot less. So if you bought platinum, you're probably down. But in my imaginary thing, all your gold coins and your silver is worth 600 and you paid around 300. So you're up 300. Next, I talk about collectibles. Well, what's a collectible? You know, people years ago collected stamps. And now, since people don't use stamps, they're on the internet and use Gmail, the stamp collections have gone way, way down in value. There's still a few valuable stamps around, but even they have gone down in value. So collectibles, boy, that's, you know, huh, up and down. Somebody used to collect Toby jars. That's you have uh, a human being face with a nice hat, and you drank your beer out of it. All those used to go for $1,000 each. They're about 200. So collectibles are very variable, you might say. Uh, Guess what has gone up lately? A Fender guitar. You used to be able to pick up a Fender guitar for a couple of $100. I've seen them go for 2,000 or 3,000. So who knows what your collectibles are worth, but you can figure out what they are uh, and put the figure in for your cost and the market value. Another collectible that I almost had, you can't believe this one. When I lived in Nevada, I had a Ferrari convertible, a very small one. And I guess it must have been about a 1960, bright red. And I drove it around and had a wonderful top speed. It went to about 200 miles an hour, which is 400 kilometers an hour. Wow. huge top speed. But the problem with it is the door handle would fall off, the top wouldn't work right. And so I sold that Ferrari. I bought it for 7,000, sold it for 5 or 6. Haha, saw it at auction for over $1 million. So the thing about collectibles is you never know what they're going to be worth 20 or 30 years in the future. Okay, I'm going to fill that in. But now the next thing I'm going to talk about is stocks, Amazon or Microsoft. Maybe you were lucky and you bought one of those stocks real cheap. But the truth of the matter is, most stocks don't do very well. They barely keep inflation. They barely keep up with inflation over a long period of time. But the nice thing about stocks is they are liquid. So in a way, I should have put that up here with crypto and bank accounts, because when you have a stock and it's on the market like New York Stock Exchange, you can sell it, and within 1 week, you get your money in your bank account. Okay, so stocks are more liquid, but there's no guarantee you're going to make a profit on them. Okay, next, this is a category that almost all of you, at least 75% of you, will have. What's real estate? Well, you start out with your own home. Now, your own home is worth something, and you paid something for it. And if you bought it 10 or 15 years ago, boy, you paid peanuts. And it's worth a lot now. I'm going to fill in some fictional figures, but you might also have bought an apartment or a house or inherited one. And so, of course, whatever real estate you have, you're going to put in what they call your equity, because a lot of real estate will have a loan against it. A loan is usually called a mortgage, but you could have taken out a personal loan against your real estate. So you could put in your real estate total value here, and then you're going to have the minus something, and then you're going to put in the net here. All right, we were talking about collectibles. Now that is like the lottery. Years ago, and some of you may remember it if you're old geezer like me, Cabbage Patch dolls. They were going for fairly big money. Each one was different, and they could be worth quite a lot. Today, nobody wants Cabbage Patch dolls. They're essentially worthless. Same with trolls. But today, some promoter is promoting La Boo Boo dolls as the next big thing, the next big collectibles. And people, especially young girls, they are imagining that if they buy a La Boo Boo doll, it's going to be worth a lot, in 10 or 20 years. I don't think so, but I could be wrong, because Barbie dolls, not all of them, but the rare ones of 50 years ago, can be worth a few $1,000s. So that's why I said it's kind of like the lottery. You can buy collectibles, and it might be worth a lot, might not be. I had a huge collection of comic books, and among them was the first edition, the first issue of Superman. And my cameraman just told me that that could be worth over $1 million. Hard to believe anybody would pay that for what was, I think it was a 5 cent or 10 cent comic book. But my original Superman was in the custody of one of my ex-wives, who put it in storage, then forgot about it. And one of these guys you see on TV who buys up old uh, storage units, abandoned ones, he got that comic book, and he probably didn't even know what it was. Pile of old comic books, he probably burned it. Well, anyway, that's enough about collectibles. We already talked about stocks, okay? Stocks are very liquid, could be good, could not be good, but real estate, now that is something that is, well, historically, you could have bought in a town that is now a ghost town. If you bought in the middle of nowhere where there's no jobs, you could have bought a house 100 years ago, 50 years ago, 20 years ago, and the area has been depopulated. And in places like many places in Europe, you can get one of these old abandoned houses for $1 dollar. In fact, in some towns, the government will even give you buy it for $1 and they'll give you 20,000 cash to fix it up. Crazy, huh? But let's just talk about the typical house in a suburb of a big city like Chicago, New York, Milan, Los Angeles. The typical house in 1950, which is 50s, about 70 years ago, was $7,000. Can you believe that? You could buy a house for, well, we're talking about a 2-bedroom, 1 or 2 bath house with a 2-car garage and even a big yard, $7,000. The average house now is $500,000. So if you put your cost and your present day value, you're probably up to $400,000. So even if you don't have any money today, I suggest you buy to rent. You pay rent, maybe a little more, and then you own the place in 20 years. And in 20 years, if inflation keeps up the way it has been, you probably have a house worth, oh, maybe 7 million. So you add a zero to get your value. So I highly recommend buying real estate. And if you get a mortgage and it's an income property and you can cover your mortgage with the rents, you're going to be in Fat City, and your descendants are going to be in Fat City. Next, credit and debit cards. Well, a debit card is like a bank account. You put money in. I once put in $2,000 in a debit card so I could charge things. And of course, they take the money right out of your debit card, but it's not like a credit card. What's the difference? Very simple. On a credit card, you owe money. And not only do you owe money, but you may owe money plus 20 or 30% a year interest. So if you can have a debit card, you list the value of the debit card, and it can't be less than you paid. All right, the final and last thing we're going to talk about is receivables and pensions. Okay, I'm going to put this down. Talk about receivables and pensions. A receivable is simply money that's owed you. Maybe you lent Uncle Charlie $500 so he could buy a saloon. Well, you put in the present value of that. It might be what you lent him plus interest if he's a reliable guy, or in the case of my relatives, zero. So that's a receivable. Now, another category is a pension. It's like sometimes you can buy a pension from your insurance company. And as you grow older, that pension has a cash out value. So I would put in cash value of pensions and insurance companies, which is probably, well, depending how long ago you bought it. If you bought it in the last 10 years, it's worth less than you paid. But if it's 20 or 30 years old, you may be ahead quite a bit. But that is not the way to make money. Pensions, insurance company, uh, annuities, almost a guaranteed loss because the broker who sells it to you gets 10 to 20% commission, and it takes 5, 6 years to just get back to the purchase price. So that is how to list all your assets. Once again, to review, you put in your cost and the present value, and then you total them all up at the bottom, and you'll see if you compare year to year if you're going up or you're going down. And of course, if you owe money as a debt, you should put that in, and usually you have a separate sheet for something called liabilities. So it may be you owe Uncle Charlie some money. You'd have to put that in if you intend to pay it back. A lot of my relatives never intend to pay it back. But I do. If I borrow money from a relative, I will pay it back. Okay, so a separate sheet for liabilities and assets. You compare them every 6 months or every year, and you'll see if you're ahead or behind. And why don't you do one today? Do one today. Now listen, I don't usually give away stuff for free, but if you have a question, put it in the comments, okay? And I will answer. So if you have a question about making up your own uh, balance sheet, just ask in the comments. And here's what I want you to do. If you like this video, press that little hand that goes like this. That's called an upvote. I'd like you to subscribe. Doesn't cost you anything. It doesn't really mean anything. But if I get enough subscriptions, who knows? YouTube might actually pay me something. But I need about 1 million more. Okay, so that is the story for today. Oh, and don't forget to comment. I like comments. Even if you don't have a question, give me a comment. And be sure to upvote. And that is our instructions for today on how to make a balance sheet.